Good morning, everyone. Thank you for coming around. My name is Jerry. I'm the senior analyst for IMFXGlobal. And basically, what we do is to help um, pass knowledge and information about forex trading to everyone, all our subscribers, and all our clients. Okay, so thank you for coming around. I hope today's topic will be able to give you an understanding of what you need to know about the forex market. Basically, who moves the market? This is one of the topics that is quite important, but a lot of traders out there fail to understand this, and eventually it affects their forex trading and their perspective about the forex market. So just kind of stay with us while we'll run into this. I hope fully that after this we'll be able to give proper understanding of proper conception of what the forex market is, and this will give you an edge to your forex trading career. Okay, so while we're doing this, we'll solicit that you subscribe to our channel, okay, and also turn off the notification bell, so when we're releasing any video or any training, we do a daily analysis about forex market and how those trades that we want to look into and those trades that we've at one point or the other taken. So you can deem it fit to also subscribe and turn off the notification bell, so when such videos are out, you be notified to actually come around to view them. Okay, so all that said, let's kick right in there. So we're looking at who moves the market. Okay, who moves the market? Buyers and sellers. All right, so okay, now buying and selling, it's a very as simple as it sounds, it looks more or less complex. Okay, so I want to believe you guys have an understanding about what buyers and sellers is it just an understanding of a guy who sells, or someone who buys? Okay, or up and down movement, buying, sell, or put, or whatever you have it in mind. So guys, first thing first, who moves the market? You or me, or the big guys? Okay, so basically it's very important for you to understand that the guy who moves the market is the big guy. Okay, and right here you can see that these are all receipts of the move of the big guy. Okay, so every candle you see, okay, are all receipts of the transaction, the previous transaction of the big guys. Now with all these receipts, knowing fully well that the guy buys a BMW or a Ferrari, does it mean that he's going to buy or sell a Ferrari again? Okay, so for the fact that you have a candle showing a red candle, does it mean that the next candle should be red? Okay, so it's important for us to have this knowledge, and I see it as a major problem that a lot of traders have when they come to trading the forex market on buyers and sellers perspective. Okay, let me give a little bit of example or explanation. Okay, you have market goes up, okay, and you can actually see this, that this is a what, an uptrend, okay. Everybody's an uptrend, and an uptrend has a kind of a logic of if the market goes up, it comes down, okay, right? It goes up, it comes down, and right now, what is the big boy doing? You can see that the big boy is actually, the market is right, is buying. The big guy is what? Is buying, because we are all looking at the receipt of the big guy actually buying this. So we have that knowledge that, okay, if there is a discount, okay, and price falls down a little bit, we want to buy, okay. Let's assume price comes down and you have this, okay, you buy. Well, right in a little profit, but then you have market begins to fall down and you begin to see, okay, well, it's like it's not going up, okay, but you have a resistance right here, okay. Now you have this, it said, oh yeah, I'm going up, it's going up, okay. Now market begins to turn back. Now you begin to have an understanding that, okay, it's a sell, right? Now everybody is preparing for sell, right? Okay, now notice that the prepare for buy activates here, okay, and the prepare for sell does what? Activate here. Now what happens to us who are selling and buying? The traders, the small guys. You discover that all the small guys are actually coming in late. We're coming in extremely late. The big guys have already taken a particular decision before we, the traders, come in at a later hour. Okay, so, and this happens almost all the time. Almost all the time. You find it, traders always coming in late into the market after the big players have actually taken a lot of the profit. Okay, now let me just give a particular concept, okay. Let's take, for instance, a Ferrari, okay. You have a Ferrari, okay, or probably like most of the examples I've always been using, an iPhone, okay. All right, an iPhone. Okay, let's take, for instance, market begins to pull up, okay. Please, when this car or an iPhone gets released into the market, okay, how is the demand? High, right? Okay, everybody wants to buy a Ferrari, everybody wants to buy an iPhone. Just like the iPhone 11 that just came out, everybody's zooming for the iPhone, okay. Now prices begins to go up, but don't forget that the big boys buy right here, okay. Now in any product that comes into the market, okay, think about it. Any product that gets into the market, think about it. Who gets that product first? The big guys or the traders? I guess your answer is as good as mine, okay. The big guys gets the market first. All right, now these VIPs, okay, get access to exclusive stores first, then we the traders actually are coming in late. That means all the activities of the big guys happen right there at the bottom, okay, and price begins to come up, okay. Now for the big guy, it says right here the price is high for him to buy. He's not interested in getting the price again. But then take note that there is a guy out there who has no information and says, well, if he doesn't get that Ferrari, he doesn't get the iPhone, the latest iPhone, he's not going to pick up the nice girl, he's not going to have a nice the most beautiful girl in town. if he doesn't have that iPhone, he's not going to have a say when it comes to selecting things, or he's not going to have prestige. That's it. Let me just say like that, okay? And this guy comes in and says, okay, right here, I'll buy it, okay? Right here, I'll buy it. Now, price begins to come up, and more of this type of guy, comes in, and he says, well, Tunde just bought an iPhone, just bought a Ferrari, iPhone 11, okay? At this particular price. He says, well, screw him, I'm going to buy that same thing, okay? Or a friend of yours just got a Ferrari, and the next guy says, well, he got a Ferrari, well, I'm going to buy a better edition of the Ferrari, okay? Every individual is buying where? At high price, always buying right here, when the price is always high. But don't forget that the big guys, okay, start his own decision right here, okay? So people begins to get all this price, at all this price, more expensive for a particular product that's personally valued at this price, okay? Now note that as the demand of a particular commodity begins to increase, okay, price begins to go up. Then it gets to a point, people start saying, well, I can't get that iPhone again, I can't get the Ferrari again, it's too expensive, I can't get it again. Now what does the Ferrari or the iPhone dealer decide to do? Because nobody's buying, it does what? It discounts, okay? Price starts to come down, okay? Now when price discount, those who bought it up here, they still have to pay their loan, they still have to pay taxes on that particular product, okay? They have to still absorb that particular amount of money that they've spent to get that particular product. Now note that this all happens in general way of life. Even when you're buying a car, you mortgage to get a car, or you understand. Now, so this guy is paying him because he's paying for a house or an iPhone or a Ferrari that's losing value, okay? Please don't forget that all these things happens, and as price begins to reduce, okay, this guy gets stuck out, okay? Now at this point, he begins to say, well, because the Ferrari is losing value, I need to sell my Ferrari, okay? I need to sell my iPhone, I need to discount it. Do you understand? Now, and when the price of iPhone gets here again, look at this guy, the guy that bought here, comes in here and say, well, I'm going to buy another one. Please take note of why the big guy keeps buying at this bottom. And he says, do you understand? Now, this happens all the time, okay? It happens in every market, As the prices goes back down, the big guy does what? He comes in again, okay? Please notice why this guy buys here again, because everybody is selling it because the Ferrari is losing value, the iPhone is losing value. Then this guy says, well, you guy, good discount, okay, for me, I'll buy it again. Can you see the logic behind the thinking of the market? Now this up and down movement, okay, they are prints of the big guys, okay? I hope this makes sense, okay? Yeah, I hope this have quite understanding to this point. All right, so yeah, so let me just clear up the screen, okay? So far so good. Now you have this concept of the logic, right? So people begins to enter very late in all these markets. Now how do we then understand the conception of the buyers and sellers, okay, when it comes to trading in the Forex market? We have the logic already. You just saw the idea that I've brought out to you, These are things that happens. But then how do we put it in footprint of what we trade on daily basis? Okay. Now, guys, now this is Euro USD on daily. Okay. Now you can see price begin to go up, came down a little bit. Now at this point, and price begins to go downwards, going downwards. Okay, halting a little bit, going downwards, going downward. Now alter. Okay, now for you to understand, always look at something called the big trend. Okay, the, the big trend. The big trend gives you a clear clue of where the market is heading. Okay, presently, where is the market going to? Down. All right. Okay, now as soon as you have this information of the big trend, okay, check. All right, your first assignment done. So now we have an understanding that, okay, on the big guys chart is a downtrend, right? And the second check you need to find out is the speed. Okay, speed of the move. Now it went down this much and pulled back this much. Okay, is that strong? It went down this much and did what? Pull down this much. Okay, is that still strong? Okay, it shows that you can see this much. And can you notice how this move begins to grow? And you have, it went down this much and it put down this much. Okay, now you can see the speed of the market. Okay, now at the point it gets to a time that the percent of the speed is not up to 100% anymore. Okay, you have an understanding of the second check. Okay, all right, so second check done. We've understand the speed of the market, we've understand the strength of the market. Now let's go a little bit time frame down. Okay, let's go to 4 hours chart. Okay, let me just take this. So let's look into it now. In the daily time frame, where was the market heading to? Market was in downtrend, right? On a downtrend, and you can actually see it from here. Wow, good. Market going down, right? And you can see all the information of the big guys right here. Now let's look at it from this perspective. Okay, now when markets start heading down, what happens to the traders? Start buying right here. Okay, they start selling, start selling his iPhone right here. Let's assume he sells his iPhone right here at $600. Okay, sells his iPhone and the price of iPhone keeps heading down. Good, fine. Okay, take note, as market begins to head back up to that $600 area, what happened? Prices begin to head back up. Now this guy thinks, okay, now market is going backward, so he decides to sell his iPhone. Now if he's going to sell his iPhone, at what price will he sell it? He's going to sell it probably lesser. Okay, he's going to sell it lesser, and a guy decides to buy it right here and says, I'll buy it $400. Please kindly take note, as market begins to go upward, all these guys, okay, they begin to get panic on the way. All these sellers that join the big guys begin to get panic, and all of them start turning to sellers, to buyers, right? All these guys that were selling with the big guys automatically start selling their iPhone and buying it right here. Okay, and as they buy, look at where the buy started, and says, do you know, I just bought an iPhone. Okay, now he buys an iPhone and price start heading up. Okay, he calls his friend buys also an iPhone. Note, as price begins to increase, the price of that particular commodity begins to do what? Begins to increase. Price for $1,000. Price head up. Okay? Take note that as it buys, what happens to the price? You have high. Am I right? And we can have an high. Price begins to halt around that same location. And let's say because of no clear break around this region, price begins to fall down back. Can you find the sequence of how this whole thing is working? That at one point or the other, when you get into the market, at what market price are you getting into? Okay, is it the price for the big guys, or you're panicking with the big guys move and decide to turn a new leaf by following the buyers without having an information that this guy in the big trend is not too far away from where the market will start hitting down again? Okay, so these are basic concepts that a lot of people, a lot of traders fail to get into. Okay, and at the time they get into this, it's already too late. And you can also check yourself, check your trading career and see, have you find yourself around this buff that when you sell a particular currency pair, at what point do you sell it? Are you getting in the market at the right time? And when market starts going against you, what is your decision? A lot of traders' decision is to get out of the market and join the other trend. Forgetting the fact that on the big chart, you have this guy right here waiting there, okay, to do what? To sell it again. So these are basic concepts you need to understand when you want to trade. First and foremost, what market are you in? Are you in the big guys market? Or you're in the traders market? Okay? Always find out at what market are you. And if you're in the traders market, hey, my friend, you have to be very careful, because the traders market, it does not last long. Okay, the big guy can set in at any time, and once he gets in, it becomes very difficult for this guy to come out clean. Okay, so first and foremost, where's the big trend? You have the big trend, okay, downwards. What's the speed of the move? Okay, you have a nice move downward, and you have about 20% of this move downward, which is still very good. Okay, your next move downwards, okay, and you have up to like 50% or more. Okay, but the dash says that this guy that ran down here is tired of moving, still taking a run. No. So these are informations that you need to have before you start trading the forex market. You need to know who is moving the market. Secondly, you need to understand which market are you. Are you in the buyer's market? It's either sideways. If the market is uptrend on the big guys chart, okay, the big trend shows an uptrend. Now, carefully watch down to the lower time frame to know which market, at what point are you getting in. Are you going to get in the big guys market, or you are getting in at the traders market? What professional traders always do is that they try as much as possible to hide under the shadow of the big guys. Let me take that again. Professional and successful traders, they always want to hide under the shadows of the big guys. Okay, Now, this is what happens. We have an idea of where the big guys market is heading to. A downtrend, right? Now, each time you have a downtrend, you should expect an uptrend, okay? A little uptrend, okay? And when you have this uptrend, professional traders will take an opportunity at the uptrend to follow the move of the big guys. Now, knowing fully well that this big guy, because he bought an iPhone right here, he won't want, because he sold his iPhone right there, he won't want to lose his market, okay? He's waiting for traders who don't have information to buy at an expensive price. Once they buy at an expensive price, he sells it again, okay? Now you have to wait until the traders are done. You need that information. Okay, the traders seems to be done. Now it's time for you to get in to the market, joining the big trend downwards, okay? Now, and you can see each time you have that halt, you can see slack movement, okay, rejection candle around this region, and price begins to find it very difficult to move up because the buyers who are buying here, they're buying at expensive price, and each time they buy at an expensive price, what happens? You have the big guy coming in again, okay? Each time the traders come in, buy at an expensive price. See, I want you to buy my product at an expensive price, and each time you buy at expensive price, I will sell it, okay? So for you to be successful in the Forex market, you need to have the understanding of where the big guy is, okay? Always have the understanding of where the big guy is. That will give you proper perception of the buyers and the sellers, okay? So we have been able to take a further step from logic, using logic to analyze the Forex market. So try as much as possible to soak in deep. When you want to place a particular trade, go into your chart, look for the big trend, okay? Look for the flow of the market. Is it a slow movement or a fast movement? You have to double check. And once you have that, the third thing you need to find out is which market are you in? Are you in the big guys market or you're in the traders market? It's always safe to always join the big guys market, because in the big guys market you're covered, okay? The big guy will not lose his money. But in the traders market, you're just following proper decisions of you going to the market, for instance, and saying, today went to the market to buy a bag of rice, right? And he gets to the market, he bought a bag of rice at 5 naira. It's awkward though, you can't get a bag of rice at 5 naira, but let's use that as an example. Okay, gets a bag of rice at 5 naira, comes back home and tells Tunde, okay, Ade gets a bag of rice at 5 naira, comes back home and tells Tunde, say, do you know how much a bag of rice costs? A bag of rice, I just bought a 5 naira. Now, at the time Tunde gets into the market, right, the bag of rice has increased, so say like 10 naira. Now, because the demand in that bag of rice gets increased on a daily basis, the price begins to go higher. Now, take for instance, understand this logic. Tunde bought the bag of rice because Ade told him that the bag of rice was 5 naira. And that's what a lot of you do. You trade on buy because everybody, the candle is buying, okay? Because someone says, oh, you have to buy, because you have to buy the market now, and that's why you're buying. Now, Tunde bought a bag of rice because Ade told him that the bag of rice is 5 naira. He's not buying the bag of rice because it was right time for him to buy that rice, okay? And that is this concept a lot of people fail to understand in the Forex market. They keep buying when the buyers are active. They keep buying from the buyers at expensive price, while they need to buy from the right individual in the market, which are the sellers at a more discounted price. So try as much as possible to understand the logic. In subsequent lesson, I will be explaining further details on how to take advantage of the moves in the market. So for now, I don't want this video to be too long, so have a nice day, and we see in subsequent videos put up. So try as much as, don't forget to subscribe to our YouTube channel and join our Telegram group, where we'll be sharing more details on how to understand the market decisions. So for me, I say have a nice day and trade wisely. Okay.